Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Friends, in this video, I like to answer one question put forward by one of our audience, and he asked me his mortgage renewal is coming up. Should he get into fixed rate or variable? Friends, when your mortgage approval is coming up, there is certain considerations you have to keep in mind. Number one is if you intend to stay the property for 5, 7, 10 years, then you want security that your rate doesn't go up. Everybody is believing that the rate eventually will come down sometime this year. Nobody has the crystal ball. Some people are saying June, some people are saying July. But my understanding is US economy is doing really good, so chances are the Federal Reserve in US, they might not cut the rate till September. So there might be divergence. US might cut the rate later in the year, probably September, and sluggish economy in Canada might put Bank of Canada's governor to cut the rate sooner, probably in July or June. It looks like more July than June at this point of time, but again, we will find out in next few weeks. So coming to the penalty part, if you get a variable mortgage, the penalty is only 3 months interest payment. But if you have a fixed mortgage and you break the mortgage in the term, then the penalty can be substantial, calculated as interest differential. So how do you know the amount? Simply pick your lender and say, in case I break my mortgage today, how much is the penalty? And as a savvy consumer, always ask if your low mortgage, you can port to a bigger property if you want to buy a big property and get extra money. So they can take the new money at current interest rate, and if you have a low interest rate, you want to take an opportunity in today's market. There's some deals in the market, you want to buy and move into bigger property, you can actually blend the rate. Now coming to the stats, folks, I got did some research from Banker Association and top 5 banks. I will show you in next 2 years what is the share of insured mortgages versus uninsured mortgages. So all my first time home buyers, just want to clarify, if you are doing less than 20% down payment to get a mortgage, it means your mortgage has to be insured either by CMHC or Sajan or other insurers. If you are doing 20% down, then it is not an insured mortgage, meaning you are doing more than 20, 25, 30% down. Another thing you have to keep in mind, when the mortgage is insured, you pay extra premium, but you get the best rate from the bank. So let's talk about stats. So folks, over 2.2 million mortgages are set to renew in 2024-2025 at higher interest rates. So as per the recent data, 60% Canadians have already renewed the mortgage and 40% will be renewing in next 24 months. And a lot of banks, they are giving good deals on 3 rates, 3-year interest rate versus 1-year rate. And if I talk about Ontario and BC in Canada, which has 50% population, but in these two provinces, people hold 70% of outstanding mortgages in Canada. So now let's talk about some numbers. So if you see my bar chart, on the left hand side, you have coordinates which shows 100,000 outstanding mortgages, 200, 300, all the way to 800,000 outstanding mortgages. On the horizontal line, you can see years, 23, 24, 25, how many mortgages are being renewed. So if you see, folks, the red bar shows insured mortgages, meaning people who did 20% or more. So there is total 302,931 mortgages renewed last year, and insured mortgages where people did less than 25% down, 575,146 people renewed. And this year in 2024, they are saying 336,558 people will renew their insured mortgages, and a bigger chunk where people are doing 20% down are 722,000. And it makes sense because in bigger cities like Toronto and BC, for $1 million home plus, you need minimum 20% down. Now looking at next year, folks, 2025, they said roughly 388,000 people will be renewing insured mortgage, and 770,000 people will be renewing uninsured mortgages. So all in all, what do I see in US? Because US and Canada, we just follow each other. So US economy is doing better and our Canadian economy is weak. So what it means for rate cuts? Will we have a rate cut in June, July? At this point of time, Canadian dollar is down, and today I see that Canadian dollar versus US is 73 cents, meaning lot of economists believe if we do a rate cut prior to US, because we do a lot of imports from US, and we also export, our loonie will actually tumble more, probably go back to 68, 65 cents if we diverge from US rate cuts, which probably they will do in September, or if we do in June, July, our value of dollar will go down. Again, market expectation earlier this year was 4 rate cuts this year, and now they were considering June rate cut, but lot of economists now believe in Canada rate cut might be dragged further, July, or September, who knows. All in all, guys, always consult knowledgeable realtor or mortgage broker before you make these important decisions. If you have any questions in regards to real estate, you are in a market in Greater Toronto area, Kitchener-Waterloo, London-St.Thomas, Hamilton, give our team Supermax a call. You can reach me at 647-961-2639 for any real estate or mortgage advice. Thank you.